we welcome our next presenting company. We welcome Stephen, CEO and founder of MonetaPro. Stephen, are you ready to present and pitch to our audience and investor judges?
I'm ready. I'm going to do screen share at this point. MonetaPro, enterprise platform for what's called global corporate barter. We fit under enterprise SaaS, supply chain, fintech. It's award-winning, experienced management team. The target market for us initially, $17 trillion market of what's called corporate barter. This is where the largest companies in the world trade assets with each other. So Ford will trade for airlines, automotive, media. 72% of the Fortune 500 participates, but the problem is it's still a manual process. So in order to trade, you have to identify trade partners, negotiate, track, integrate into the inventory systems, and you have to repeat that each time you want to trade. And the reason it's complicated, people go, why don't you just sell for cash? Well, the benefits of corporate trade is, imagine you're CFO of a car company. Instead of putting something on sale at 20%, spending cash to acquire new items and paying taxes, corporate barter, you trade at full retail, you acquire assets without spending cash, and it's potentially tax-free under some 1099 restrictions and opportunities in the US. So the trade systems need to evolve. There's a lot of consultancy white papers out there saying what a problem this industry is. And it's like the old days of barter. I've got chickens, you've got milk, let's trade. Well, money was created for portability, stability, and audit trails. And that's basically what we built. We built an enterprise level B2B marketplace. Enterprise means divisions and departments, rights and authorities for big companies. They can add products, they can select multiple settlement options, they can search for items. It's a truly B2B marketplace that the eBays and Amazons of the world don't do. We integrated blockchain in. We're not a blockchain company, but we use blockchain in the audit trail and inventory management. So when a major company transfers assets, we write to the IBM Hyperfabric. We can integrate to SAP and Oracle, their accounting modules, transfer the asset record between parties, and write a blockchain contract for audit. And then the solution we built, what makes it a little better, is we created what's called a multi-party trading platform. We built something called a GBUC, a business usage credit. Think of it like a store credit, not blockchain or token or crypto. It's like a store credit in eBay. That credit has value. You can sell an asset, receive credit, and buy something else. So again, now we're creating multi-party trading for a $17 trillion industry. Management on myself, I've had 11 companies. I've taken 3 public on the OTC side. So I understand the micro cap liquidity markets very well. Igor Barash, my COO, took his last company public on NASDAQ. We've got some senior executives out of Sony. Corporate, we've got guys out of BlackRock and Visa on the enterprise side. Dennis Kucinich, former presidential candidate. Go-to-market strategy, very direct. 10 primary industries that trade: airlines, automotive, heavy equipment. So we looked at the largest companies in the world that have a history of trading and targeted our top 10. We're in discussions with about 5 of these right now, and then some others that aren't on this list but fall in that category. Revenue model, we're enterprise software. So there's an onboarding fee, a monthly hosting fee, and a transaction fee off of $1.5 million and up potential transactions. So again, we built a transaction model at a B2B level that the MasterCards, Visas, PayPals don't play because it's outside the credit card network. Value proposition, efficiency, liquidity, and trust. What we bring to the companies is efficiency with an online marketplace, liquidity where they can buy and sell from each other, and the trust not only of a closed network, but the blockchain component is the audit trail to show where the assets are going. Couple milestones.
Are you sharing your screen right now with us?
Yeah, I have been the whole time.
But we are not visualizing your screen, unfortunately. You want to try to share your screen once again?
I can do, it says
because
sharing,
we would
but I'll
love
do
to
stop
see
share.
your presentation. Everybody's asking, it's very interesting. We would love to see your presentation, definitely.
So I just did share again.
All right. sometimes the internet takes a while. There we go. Perfect. Thank you, Stephen.
Now it's there. And did we lose it again? I don't know why
Yeah,
we're
I
having.
think that we lose it again. Yeah, perhaps your internet is not as strong today,
No,
unfortunately.
for a change, I'm actually sitting in Los
There
Angeles.
you go.
So we,
Now I can see your presentation.
all right. So
There you
without
go.
making everybody dyslexic, I'm going to back up and forward through this very, very quickly. The presentation I just gave, this is all very high graphics. So you'll get to see it very easily. 17, here we go, MonetaPro, enterprise SaaS, $17 trillion industry. Big companies like Ford already trade with existing partners. Average company, Fortune 500. The problem is it's one-to-one, so it's manual. They have to do it. The reason they don't sell for cash is in the trade world, you trade at full value. You can acquire assets without spending cash and it's tax-free. So there's some advantages to corporate trade, but it's still complicated. Big companies talk about it, consulting firms. It's like the old days of barter. Moneta, the word moneta comes from money, the seashells. We built an enterprise marketplace. So we've got divisions and departments and rights and authorities, customized home screens, the ability to search and find and acquire assets. We built blockchain in for the audit trails. So we integrate into SAP and Oracle. And then we built multi-party trading. We built a system where a company can list assets, trade it, receive what we built called a GBUC, a business credit, use that credit to buy other assets. So it acts like a currency within a closed marketplace. Executive management team, I've had 3 public companies. We've got guys out of corporate. We've got guys out of Visa, blockchain guys. Go-to-market strategy. These are the top 10 industries that we target. These are some of the companies we've targeted and are in discussions with. Revenue model is enterprise, SaaS, and a transaction. Value proposition, efficiency in the marketplace, liquidity, trust with the blockchain. Couple milestones, we've won 8 contests around the world in blockchain, more than any other company. These are discussions we're having. It's kind of our little, roadmap. We signed a company called Artis. We brought Shepard Mulling in for some IP filings around the blockchain solution. We've got a private label opportunity. We've got an arc of exit. So we believe we are an acquisition target across these multiple groups for different reasons. And we can go through that with anybody that's interested. Current offer, systems are complete, experienced management team, the product's built, integrated with IBM. We're looking at 5 million. So we're doing a pre-series A. We're not quite in revenue mode yet, but the software is built. We're doing a $5 million pre-series A to move to revenue. Milestones we've already hit with management team, software in place. And then we do a little comparison to Amazon, where Amazon's a marketplace for B2C, we're a marketplace for B2B. So that was running through the presentation twice in 7 minutes.
That's great. Stephen, this is great. Great presentation and tremendous initiative. Is there any questions for Stephen?
If not, I'm going to answer one more thing. I don't want to confuse anybody, but because I've had 3 public companies, we do work in crypto. I actually help write the laws in Malta around blockchain and tokens and virtual financial assets. We have a dual liquidity strategy. I don't want to go too in depth, but basically we have an equity component we're doing on the 5 million. And then we have what I call a liquidity token that's about to be listed on a global crypto exchange in Dubai. So we've got a dual liquidity path. I'm actually doing a direct token offering through a global crypto exchange, which is similar to a direct public offering in the US. Rather than going public on the OTC market, we're going to accelerate public on the crypto market internationally, and then still have an equity strategy in the US for acquisition. So I've got a dual liquidity strategy that's extremely unique within the industry. So anybody that's interested in the crypto token side, we've got a unique aspect that gives you both equity and a liquidity token to accelerate your exit.
Thank you, Stephen. Josh, do you have any question?
I do had a question about working with the Department of Financial Institutions in New York and Washington State being the number one, number two most difficult areas to work in the U.S. Curious about roadblocks in terms of getting approval for being able to barter. I think there's an opportunity with whether it's eBay or whatnot. There's a lack of trust with Facebook and Craigslist. So I think with blockchain and having the payments and everything being transparent and available is an awesome opportunity. However, where are you at with potential roadblocks and getting approved state by state or federally?
So I'll answer that, Josh, in three ways. One, there is no approval needed. All we're doing is facilitating corporate barter. These companies are already doing off-book transactions. They're just not effectively tracking it. So we did go to the IRS and said, where do we fall? The IRS already has a 1099-B, a bartered or brokered transaction that needs to be accounted for equal party transactions. If that is done under a barter exchange platform, which is like the small business barter that exists in the US, that barter exchange legality rule allows you to transfer assets, earn a scrip, and only be 1099 on the accreted value at the end of the year. So barter for small business is like QuickBooks and Amazon and your local restaurant. Corporate trade exists under the same IRS rules. Nobody's, to our knowledge, has built an enterprise platform. And when we went to the IRS, we are going to 1099 the companies based on the value at the end of the year. So there will be tax implications if there's a balance. But over and above that, all transactions are written to a blockchain for audit trail. So it helps the enterprise not only have audit capability for their transactions, but the IRS would then also have transparency into an industry. IRS thinks there's about $1 trillion or more of off-book transactions in the US that are unaccounted for because they can't track it and can't really audit it. So when we did go to the IRS, we didn't go to Treasury because we're not a Treasury component, but the IRS likes what we're doing because we potentially bring audit capability into an otherwise, austere market that's buried on the balance sheets. And then same thing with two countries. We're in discussions with Kuwait around what they call swaps and flips, where Kuwait's trying to figure out how to potentially integrate our market because we're a closed platform and everything's trackable and an audit trail. So there's some compliance things we bring in, but otherwise we don't fall under Treasury. And then with the token we're not selling, so we don't fall under the SEC's misguidance right now. We're gifting the token to the investor and we hold it in a Treasury wallet in Malta. And the investor can take possession at some point in the future whenever guidance is clear for the US investor. So I separated the legality out on both the token side and the IRS side.
Thank you, Stephen. John, let's move on with the last question for Stephen, please. Thank you.
Amazing presentation, great presentation, and really appreciate it. Just a quick question. I always wondered, what is the value of a fully depreciated asset? I assume that this is what is being bartered.
No, you know what, John? It's a complicated and yet simple question. Let's take it to real quick. If you own a car, you're the CFO of Ford, your asset depreciates every day. And at the end of the model year, you could put it on sale for 20%, sell it and still pay taxes, or you could call a computer company and trade the assets at full retail value. So you might have a depreciation in the normal market, but within the trade market, if I've got cars, I'm not going to call you and say, hey, John, give me a discount on computers. I'm going to say, my cars are $1 million full value. I'm going to book that in EPS revenue. You sell me your depreciating computers at full value. If I price them lower, that me as the seller is my discretion of what to price them at in the marketplace. But I also now have transparency of other products that are listed. So if I put an asset out that's overpriced, it's not going to move in the marketplace. It's like putting a computer in eBay for 3,000 when the market variance is 1,000. So we don't get involved in pricing, but it's It's an interesting market at full retail transaction. The other one real quick is simple. What's called a terminating asset. Shipping companies, when the ship leaves the port, you can't resell capacity. So Maersk, DB World, these guys try to trade that capacity out, because if they don't trade it, or a hotel room, you know, you've got an asset you can't resell. That's a depreciating asset on a daily basis. There's a different motivation for the service industry, food, shipping, media. Those conglomerates are a little different. So there's motivation for different industries based on how they want to use the system. Or a lot of them are already doing this trade. We're not inventing it. We're just trying to help them automate it.